Jeremy Grantham warned the S&P 500 could tank by up to 50% as the everything bubble bursts. The GMO co-founder predicted a sweeping market decline and a harsh recession. Grantham advised against holding US stocks for now, and slammed the Fed for inflating asset bubbles. He warns the everything bubble is bursting, the S&P 500 could nosedive 50%, and a recession looks certain. Jeremy Grantham told economist David Rosenberg during a recent Rosenberg Research webcast. The prices of stocks, bonds, houses, fine art, and other assets soared to heady highs during the pandemic, paving the way for a historic crash and a painful recession, the market historian and GMO co-founder said. Grantham blasted the Federal Reserve for inflating asset bubbles time and again, and warned investors against holding US stocks in the short run. He also wasn't surprised to see cracks in the system, such as the dramatic collapse of Silicon Valley Bank this month. Here are some of Grantham's best quotes from the interview, lightly edited for length and clarity. This one is pretty big. It's bigger than 2000, because it includes real estate and bonds, and that one did not. The economy had a gentle recession. It had no problem with real estate. It had no problem with markdown of debt. And yet, the Nasdaq went down 82%, Amazon went down 92%, and the S&P went down 50%. Be advised, this is not a gentle setback like 2000. The trouble with this bubble is it's an everything bubble. We have bubbled the important and dangerous housing market to record prices. We bubbled the bond market to levels that had never been seen in the history of man with the lowest rates ever recorded. Fine arts and every other asset through the roof, and equities, particularly in the US, at or close to the highest points ever reached. The big picture is we have a little handful of these super bubbles. Every one of them is followed by a recession. If you get anything really wrong, like 1929, it's followed by depression. If you mess around with the financial system, you have the terrible happenings of the great financial crash. We may settle for something like 3,000 on the S&P, all being well. If the extra factors bite pretty hard, then the market will go closer to 2,000. The economy is very likely to be quite a bit weaker, and profit margins are very likely to be lower. History is quite clear. There are bubbles, they have always broken, this one is breaking. I hope it's well known by now that the Fed has never got anything right since Paul Volcker. They have merely created an environment conducive to a chain-linked series of super bubbles that break with outrageously consequential, painful effects. So is it true? Is the end here? Keep your eyes open.